And welcome everybody, this is FXPassion. Happy Monday. This is Forex Trading for Beginners. And we are starting March trading Japanese candlesticks. And today's topic is the sign language of the market. Okay, great. So, Melbourne, Singapore, Madrid, London, New York, Toronto, 10 a.m., 3 p.m. London, England, Madrid, 4 p.m., Singapore, 11 p.m., and Melbourne, 2 a.m. Still no change in the time zone. Okay, everybody, this is Forex Trading for Beginners. Our goal for you is to become consistently profitable, minimum 3 months, knowing when, how, and why you make and or lose money. You should not be allowed to trade with real money until you reach the goal. What is the goal? To become consistently profitable. Hello Miguel, how are you? After the webinar, Miguel, give me 5 minutes because I need to change the station. Okay, so I'm going to call you. But we meet after the webinar, right? And everybody, here is disclaimer: don't trade with money you cannot afford to lose, and the webinars are not investment or trading advice. They are for educational purposes only. Your job is to question everything and don't be fooled after you understand and master all these things. Trading is still 80% emotional and only 20% technical. So in order to be successful at trading, you need to have your mind and your heart in the right place. Remember, if being consistently profitable is difficult, you probably still have things to learn, and if your way is not working, why don't you try ours? Just try, okay? Remember, 90% of traders who makes it between the 3rd and the 5th year. For homeworks and or coaching and or training or just questions, you can send your homeworks or question to the Gmail contact, to the Skype contact, or to the LinkedIn contact. Maxine, hi, do you provide signals as sharing at social media like Instagram? No, ma'am. No, ma'am. No. No signals. Maybe in the future, but for the time being, the answer is no. Okay, everybody, so let's dive into the live markets. And let's open EuroCAD and let's start EuroCAD. Who knows? Who in here knows what is the sign language of the market? What is the sign language of the market? What do you think? The market gives signals. The market is telling us what is going most likely to do. Okay, who knows what is the sign language? And we're waiting for EuroCAD. Candlestick formations, everybody, are the sign language of the market. Candlestick formations. Yes, sir. Okay, so step by step. What did we learn so far, everybody? If you're a beginner trader and you don't know nothing about the Forex market, what we have learned so far? We have learned how to identify structure. It could be an up structure or down structure, right? A down structure. This was January. Structure, trend lines, counter trend lines. We learned this so far. How to identify structure, how to identify trends. Oh, not this one. So where is the down trend line? We learned how to spot, how to trade support in an uptrend and resistance in a downtrend. This is what we have learned so far, right? So we are upgrading the knowledge right now. Okay, so far, if you're with us from January, so far you should have learned how to identify, how to spot the market structure, how to identify, how to spot the trends, the uptrend, the downtrend, the sideways movement, how to identify support, resistance, and pivot points, and how the market direction is going to how the market is going to react to the different ways, to the different pivot points, support and resistance levels. And to this month we are going to learn how to, we're going to add another reason, another indicator, which is called the candlestick formations. Okay, so most likely the market is going to react. Okay, so we said we have extensions and we have retracement, right? So extension, so the market is moving in extensions and in retracement so far. Retracement. Okay, so extension, retracement, and in a downtrend it's the same. You have the extensions and you have the down retracement. Okay, it's all the same, just in the opposite direction. Okay, now where does the change in trend or in structure happen? Well, it happens when the market shows or finds the relevant candlestick formations. Okay, so you can write this down, everybody. Okay, this is trader's hint. The market is going to change direction when it finds the appropriate candlestick formation. Okay, so the market is going to change direction when it finds the appropriate candlestick formation. So if red is structure and the market is going to change from an extension to a retracement and vice versa, from a retracement to an extension when it finds the appropriate candlestick formations. And the same goes to a downtrend. You've been in extension, the market is going to find the appropriate candlestick formation, then it's going to change direction, and again when it's going to find the appropriate candlestick formations, then it's going to reverse again and again and again. So if you're a beginner trader, this is an upgrade of your knowledge. So before you enter a trade, number one, identify market structure and trends with the trend lines. Number two, identify support, resistance, pivot points. And number three, identify candlestick formations. Okay, and before we go on the candlestick formation, those are the rules, two rules. Rules for trading. Number one, in an uptrend, always buy and never sell bullish candlestick formations. Number two, in a downtrend, always sell and never buy bearish candlestick formations. Those are the rules. You need to listen to these rules if you're a beginner trader. Robert, FXPassion, do you have some lectures about supply and demand levels? No sir, I don't have, I'm sorry. Idiko, hi, would you look at GBP USD please later this one? Yes sir, absolutely. So rules for trading: in an uptrend always buy and never sell bullish candlestick formations, and in a downtrend always sell, never buy bearish candlestick formations. Okay, now I have two slides. Okay, bullish, bearish, let me see. Okay, So this is slide number 1. I don't remember what web page did I found this, but it's in the internet, everybody. You can take a screenshot of this, or you can send me an email. I'm going to email to you back. Okay, there are a lot of candlestick formations on the internet. If you go on Google and write candlestick formations, there are, I believe, 15, 16, but those are the most important, and I choose these slides because they are self-explanatory. Okay, and don't bother with the names: the bullish shooting star, the bullish morning star, the bullish engulfing candle, the bullish piercing line, and the bullish tweezer. But don't bother with the names, no problem. But those are the bullish candlestick formations. So there are 1, 2, 3, 4, 5, and there is also how you can buy or how you can sell. But what is interesting are the rules. So not every candle is a candlestick formation. If you can see the bullish piercing line, there is a rule: close of the bullish candle must be beyond a 60 U-turn of the bearish candle. So if it's a 50 U-turn there, this is not the bullish piercing line anymore. And the bullish tweezer bottom, the wick must be minimum 60%. If it's 50%, it's not bullish tweezer bottom anymore, right? So those are the rules. We are not going to waste any time, but you can take a screenshot or send me an email. I'm going to email this, but they're online. Just type bullish candlestick formations, bearish candlestick formations. So those are the bullish candlestick formations, and the bearish, okay, I believe are here. So this is the bearish, and as I said, don't bother with the names: the bearish shooting star, the bearish evening star, the bearish engulfing candle, the bearish dark cloud cover, and the bearish tweezer top. Okay, so if we are here, right, those are the rules. In an uptrend, always buy and never sell, and in a downtrend, always sell and never buy. So you have bearish candlestick formations in a downtrend and bullish candlestick formations in an uptrend. And IDICO, I hope that I pronounced correctly, or what time frame. So let's open GBP USD, daily chart, right? Okay, if this is the daily chart, everybody, and you have the market broke the downtrend line, right? Let's color code this like black, and in here. So let's see, let's compress the chart. So we were in an uptrend, long term. Let me check, maybe we are still in an uptrend structure. Okay, GBP USD daily chart, we were still in an uptrend structure. Okay, so in an uptrend, only buy, never sell bullish candlestick formations. So if we are going to dive into the chart, right, and we have the market is going to change direction when it finds the appropriate candlestick formation. Well, let's do like this. Where is the, let's undock like here. Okay, so, and GBP USD, where is the daily chart? Here, there you go. Daily chart, and bullish candlestick formations. So look at the picture and look at this here. Of course, one is theory. The market sometimes behave in different ways, you know, but in here, this in here, this would be what, everybody? What is this? The red arrow is pointing. What is this? Is this a bullish shooting star? Is this a bullish morning star? Is this a bullish engulfing candle? What is this? The red one, the red arrow is pointing. Okay, I'm going to zoom in a little bit more. Some of you are saying that you cannot see. And here. What would you say? The market was retracing. It was in a downtrend, right? The market was retracing, but in some point in time, it found structure. And as we said, the market is going to change direction when it finds the appropriate bullish or bearish candlestick formation. Okay, what would you say, everybody? Is this the bullish shooting star? Is this the bullish morning? Remember the rules and look at the wicks of the candle. Is this the bullish engulfing candle? What is this? Miguel says bullish shooting star. Yes, sir. Yes, sir. Okay, so GBP USD, and we say buy. If this is the most recent uptrend, we said buy in an uptrend, buy candlestick formations, right? Now, one more thing, of course, everybody. One more thing. Don't buy bullish candlestick formations in an extension, right? Bullish hammer, yes sir. Okay, so if you are going to buy a bullish candlestick formation when the extension has ended, you are going to lose on the trade, right? So we have a few more rules about trading. So number one, in an uptrend, always buy, never sell bullish candlestick formations. And we are going to add some rules, right? So 1.1 would be buy BCF, bullish candlestick formations, when at the end of the retracement together with the counter trendline break. And of course number 2.1 would be the same. 2.1 sell BCF, bearish candlestick formations, when the retracement is over, together with counter trendline break, CTB. Okay, so those are the rules. In an uptrend, always buy, never sell bullish candlestick formations. 1.1 buy bullish candlestick formations at the end of the retracement together with the counter trendline break. So don't buy in here, right? Wait for the retracement, and this was just to signal that the market is going to change directions. Okay, so with the counter trendline break, you would buy this candlestick formation, bullish candlestick formation near the uptrend line, and the same goes with the downtrend, right? So we are going to buy bullish candlestick formations at the end of the retracement, and we are going to sell bearish candlestick formations together with the counter trendline break when the retracement is over, right? So those are the rules you should obey. I'm telling you, if this is EuroCAD, look in here, everybody. This is EuroCAD, okay? So let me see the trend. It's just an example. So if this is the uptrend line, and you have extensions, retracements, extension, retracements, extension, retracements, extension, this is the extension, and you have here the bullish engulfing candle is this one. So if you would have bought the bullish candlestick formation in an extension, you would lost on your trade because the market reversed, started making lower lows, lower highs, right? So you need to address those rules, everybody. Buy bullish candlestick formation at the end of the retracement together with the counter trend line break. It doesn't matter the time frame. These rules work on every time frame: 5 minutes, 15 minutes, 30 minutes, 1 hour, 3 hour, 4 hour, whatever, daily, monthly, weekly. Okay? In a downtrend, sell bearish candlestick formation when the retracement is over together with the counter trend line break. So again, if this is EuroCAD, right, and we've lost on this bullish engulfing candle, why is this important? Well, because if you don't obey the rules, you could think that these rules don't work, but they do work, you know. So if we delete this uptrend line and we start trading this downtrend line, right, the rule says wait until retracement, wait until retracement. So you wouldn't buy bearish candlestick formations on the extension, but in here, this was the retracement, this was the retracement. And Hideko asked for GBP USD, right? So if we can go on the 1 hour chart, and this is the 1 hour chart, and if we draw another uptrend line, it's just an example, everybody. Okay, so where would you buy your bullish candlestick formations? Well, when the retracement starts. So this is a retracement, this is a retracement, this is a retracement, this is a retracement, right? Then we have extension, this is a retracement, right? And of course the market would break our short-term uptrend line. So let's check the formations. So the first retracement, what it would be? The first retracement, and we are bullish candlestick formations. So when the market reacts, what is this in here? Are these tweezer bottom together with the counter trend line break, right? What do we have? Do we have the bullish engulfing candle? Do we have the bullish morning star? What do you think, everybody? If you look at the bullish morning star, close of the bullish candle must be beyond the 60% U-turn, right? So theory on the paper, the picture, this is theory. The live market is a little bit different, and sometimes we get a mix of different bullish and bearish candlestick formations. Okay, but even though in here, even though down here we can argue that it's tweezer bottoms, well, this one in here is a bullish engulfing candle, right? So bullish engulfing candle, says Miguel. Yes, sir. Okay, so this would be number one. Then it went into an extension, and then we have 2 times here. Second counter trend line break, what was it? Bullish engulfing again, the smaller one and the bigger one. Maybe tweezer bottom because we have long wicks. The second counter trend line break, again it's a bullish engulfing candle, and maybe a bullish morning star, everybody. This could be a bullish morning star, not this one, but those are the bearish, because we have a down candle, right, indecision candle in between, and we have a decision candle on the right. So this quadrant may be the bullish morning star. On the right, the next big white candle is bullish engulfing, which is very easy to spot, right? It's going to engulf the candles prior to this one. So this was the second, right? Second counter trend line break. And of course, this is the counter trend line break number 2, everybody. Didn't work. If we entered here, we would lose on our trade. So for you to know, if you are a beginner trader, also candlestick formations are not 100%, right? But if you learn how to identify market structure and support and resistance levels and pivot point levels, and if you add bullish and bearish candlestick formations, your probability is going to increase. Okay? And of course there are no guarantees. You can do anything, you can do everything right. You can spot your structure in the correct way. You can spot your resistance support levels in the correct area. You can enter in a counter trend line break with the bullish candlestick formation or bearish, and you could still lose, right? There is no 100% trade, everybody. Remember this, especially if you're a beginner trader. Okay, so Idiko Mehesh, I don't know if I pronounce your name. What is your question about? We are on GBP USD. What is your question? Do you want to know about direction, the time frame? Should we sell? Should we go long? Should we go short? So if this is the uptrend, bullish candlestick formation at the counter trend line break. So counter trend line break, counter trend line break again, right? So we are here right now, and let's address also bearish. Let's go on GBP USD weekly chart. So this was the 1 hour and weekly chart. On the weekly chart, everybody, we are so far, right, on the weekly chart. If we compress the chart, so far we are still in a long-term downtrend, right? Structure, lower low, lower high, lower low. So if we take this fall from here to here, this was the extension. Let's check the bearish candlestick formations, right? So we are going to take this data in here. We are going to erase the structure and draw a downtrend line first. So this was the first one, and this was the second one, if you want, right? Starting from here. Okay, the market shifted the channel. So if you would sell in an extension, right, this is a downtrend right now, extension, retracement, extension, right? So yes, know that you cannot win always, but sometimes, you know, you want to enter in retracement, not extensions. Oh, Passion, but I could win also. I see I could. Yes. Okay. You have a bearish candlestick formation in here. Yes, you're right. Okay. We have a bearish candlestick formation in here. This is the weekly chart. But the market retraced a little bit on the smaller time frame. Agreed? Right? And yes, this is the weekly chart, but is sometimes just because you are going to enter in the wrong place and time and you are going to win, don't be so naive and think that you can enter anywhere. You cannot enter anywhere, everybody. Okay? So where is the trade? Well, this is a bearish candlestick formation in here, and this was the retracement, right? This was the retracement. I'm going to delete. Yes, this was the retracement, and the market went from a retracement to an extension with this bearish engulfing candle. So let's zoom out a little bit, right? In here, bearish engulfing candle in here, retracement, right? And if you want, everybody, you can go even on the monthly chart or 5-minute chart, whatever. Compress the chart, right? Still the same, we are in a downtrend. This is the monthly chart, right? So if you're a beginner trader, we are on GBP USD monthly chart. What should you do? What should you do? Should you buy bullish candlestick formations? Should you sell bearish? What should you do? This is the monthly chart. We have structure here, lower lows, lower highs, lower lows, right? And in a down structure, if you go on the 4-hour chart, 2-hour chart, whatever, we were in an uptrend making higher highs, higher lows, higher highs, higher lows, and right now we were in a downtrend making lower lows, lower highs, lower lows, lower highs, right? And it looks like so far that we are starting a new uptrend inside the down structure, right? So if this is the monthly chart and we go on the 4-hour chart, 4-hour chart, right? We can see that the market broke this downtrend so far, and the market is making higher highs and higher lows, right? Everybody, what is challenging for the beginner trader is you need to spot the trend, the short-term trend. If you are going to trade with candlestick formations, you need to spot the current trend, right? It's easy to spot bullish candlestick formations in here, right? But if you don't spot the short-term trend, you would start losing your trades in here, because you would start buying bullish candlestick formations in a downtrend, short-term downtrend, and you would get angry, you know, oh, FXPassion doesn't know what he's talking about, and this bullish bearish doesn't work, you know, and trading is difficult. No, you need to identify the trend, the highs and the lows, right? So again, we were in a short-term uptrend, right? And it looks like that the market is breaking right now. This is GBP USD 4-hour chart. You know, it looks like that the market is falling down. So how would you trade this? Well, number one, we are still in an uptrend, right? We learned how to identify market structure. So on the 4-hour chart, this is the structure: higher high, higher low, higher high. So we are still in an up structure and the market is retracing, which is okay. What we are going to do, we are going to draw a counter trend line above the retracement, and we are going to enter only with a bullish candlestick formation, which most likely we learned how to identify support and resistance, right? Which most likely is going to happen somewhere around here. Okay, so the market is still falling, and of course, passion, can I sell bearish candlestick formations in the retracement? Yes, you can, but we are going back and forth with this theory, everybody. If you're a beginner trader, trade extensions. Okay, be patient and trade extensions. Yes, you can. Yes, you can. You can sell bearish candlestick formations in a retracement, and you can buy bullish candlestick formation in a down retracement. Yes, you can. But remember, this is a risky game. Okay, if you're a beginner trader trading for 3 months, 6 months, a year, try to trade extensions. Okay, and if this is theory, we are on, this is theory, the uptrend and the retracement, and this is GBP USD, the 4-hour chart, right? So yes, you can sell GBP USD right now, and this webinar are not trading or investment advice, right? You can sell, but sooner or later, right, the market, if it's going to continue the rally, is going to reverse. Sooner or later the market is going to. So where's the problem? The problem is risk management. If you enter right now because you see the market falling, I mean, I wouldn't do this. So where is going to be your stop loss, right? And we learned about stop loss levels. The safest stop loss, the safer, if you want to short, right? And if you think, no, this market is going to fall big time, the safest stop loss would be up here. And because you have support down here, your risk management doesn't make sense. So you cannot throw trades, you cannot enter anywhere, everybody. You know, you need to identify number one, structure, as in this example, GBP USD 4-hour chart. We identified that we are in an up structure. This is number one. Number two, we identified that we were in a short-term uptrend and the market is right now retracing, so we are in a short-term downtrend. This is number two, right? So as beginners, what we are going to do, we are going to wait for the counter trend line break together with bullish candlestick formations, right? And this is all what we are going to do. And also in the trading week we are going to use candlestick formations. Okay, now there are some more things to be said right here. So those are the trading rules. Okay, one more thing, extremely important, emotionally, psychologically, don't panic. Don't panic because the market retests the candlestick formations 80% of the time. 80% of the time. Okay, extremely important. Don't panic because the market retests the candlestick formations 80% of the time. So if you're a beginner trader and you are going to enter EuroCAD, it's a trade from last week. We were in the trading week, right? 1 hour chart. 1 hour chart. Let me see, where are we? 1 hour chart. Let's compress the chart. Okay. This is the chart, the 1 hour chart, right? And because of the news announcements, we entered after this huge bullish, right? We entered in here after this huge bullish engulfing candle. We entered in here, right? Now some of you that entered here are panicking. Oh, I was in profit, but the market reversed and the market is going to retest the formation 80% of the time. So if you have your stop loss in place down here, and if this candlestick formation and the candlestick formations are the sign language of the market, if this candlestick formation is going to hold, the market is going to find a level of support, maybe in here, you know, maybe in here somewhere, and sooner or later is going to reverse and shoot back up. And beware, again, beware this week. We are full, we have a lot of news announcement this week. Okay, but technically speaking, the market is going to retest the candlestick formation 80% of the time. Sometimes it's going to continue the legs, you know, extension, retracement, extension, but 8 times out of 10 when you are going to enter, the market is going to retest. So here is a good example. We entered, we traded this. We entered in here, everybody. Last week we entered buying this currency pair, right? Because we had the counter trendline break and the bullish engulfing candle is here, right? So you entered this bullish engulfing candle, but as you see, the market retested this bullish engulfing, so it went down, right? Don't get stressed with this, don't panic. The market is going to retest the bullish or bearish candlestick formation 80% of the time. One more in here. If you entered, if you know the candlestick formations, and if you enter because of this candlestick formation right here, what happened? Well, the market went up but then started to retest, right? And if the bullish or bearish candlestick formation is going to hold, where sooner or later the market is going to find its support or resistance in a downtrend. Okay, so homework, everybody. Train yourself to spot and train yourself to trade the bullish or bearish candlestick formations. So this would be the homework. Obeying the rules in an uptrend, always buy, never sell bullish candlestick formations, and point one, buy bullish candlestick formation at the end of the retracement. If you are going to train, everybody, and believe me, when you are going to lose with the bullish or bearish candlestick formations is because you are going to enter in the wrong place. You know, maybe you are going to enter a level of retracement that isn't finished yet, or in a downtrend you are going to enter selling your bearish candlestick formation in the wrong place, you are going to lose on your trade. Okay, so homework for homework. If you want, you can send me an email. So homework, try to identify bullish candlestick formations in an uptrend and bearish candlestick formations in a downtrend. Okay, this is the homework. Until tomorrow, try to identify bullish candlestick formations in an uptrend and bearish candlestick formation in a downtrend. If you want, you can send me an email. Okay, just an example. Let's go back on GBP USD. What I want from you, everybody, it doesn't matter the time frame. What I want, let's go on the 15-minute chart. GBP USD. Let's wait for the software. So what I want from you, everybody, is that you send me a picture of the chart. It doesn't matter the currency pair, it doesn't matter the time frame, and you say to me, oh, this is a bearish candlestick formation, and this is a bearish candlestick formation, and this is a bearish candlestick formation, and this is a bearish candlestick formation, right? And this is a bearish candlestick formation. So I would check on your candlestick formation and I would ask you, well, what about this one, right? It's just an example, of course. And I would say, oh, what about that one? And what about the others? Some of you are going to send me pictures. Oh, this is a bearish candlestick formation, but this is a bullish candlestick formation. And I would ask you, well, why are you showing me bullish candlestick formations in a downtrend? Oh, because, well, we explained the rules to you, right? We explained the rules to you. So don't bother, everybody. Don't bother with bearish candlestick formations in an uptrend, and don't bother with bullish candlestick formations in an uptrend. I mean in a downtrend. Oh, Passion, but I want to trade retracements. Okay, then you go. You can, no problem. Okay. What we learned so far: make sure that your retracement is a trend when you trade, right? If you are on the EuroCAD 1 hour chart, this is EuroCAD 1 hour chart. This is EuroCAD 1 hour chart, and so far we are in an uptrend. So far we are in an uptrend, right? And you want to trade retracements like this one. You can, okay, no problem. Just make sure that this retracement is a trend when you trade. Who remembers in here how we transform a retracement into a trade? We go on the smaller time frame. So if you are trading on the 1 hour chart and this is an up retracement, if you go on the 15-minute chart, this up retracement becomes a short-term downtrend. So right now you are in a short-term downtrend. Now you can trade the retracement, short a bearish candlestick formation on the 50-minute chart, short a bearish candlestick formation in the 15-minute chart, short a bearish candlestick formation on the 15-minute chart. Just be aware, everybody, that you are trading a retracement on the higher time frame. Why is this important? Because the higher time frame controls the smaller time frame. If you are going to trade on the 15-minute chart, this short-term downtrend, right? Let's say that the market is going to retrace, right? And you are going to short the market with a bearish candlestick formation, and then you are going to lose on the trade. Don't be angry and frustrated because we told you so, right? You are trading a retracement on the 1 hour chart, and we are near support right now. And this is why we are telling you, you should make sense of your losers, not just the winners but also the losers. Okay? Oh, Passion, I lost on EuroCAD, I was shorting the market. Okay, why did you lose? Oh, I did everything right. I shorted the market, I shorted the 15-minute chart as you said, and I entered with the counter trendline break as you said, and I shorted the market with the bearish candlestick formation as you said. Okay, but this is only half of the story. Where is the other half? What is the other half? Well, the other half is that you were trading against the trend on the higher time frame. Does this make sense, everybody? Teacher Miguel, Ilya, Idiko, Robert, does this make sense to you, Maxine? Does this make sense to you, everybody? Candlestick formations are the sign language of the market. Does this make sense to you? Where are the rules? Does those rules make sense to you? Maxine, yes it is. Great. Any questions so far? Any questions? Homework, try to identify bullish candlestick formation in an uptrend and bearish candlestick formation in a downtrend. It doesn't matter, you can do this on the daily, 1 hour, 15 minute, 8 hour, 4 hours, daily, monthly, weekly. Okay? So we talked a lot about the uptrend, right? And the downtrend. What about the sideways? Let's open NZD-CAD. What about the sideways movement, the sideways channel? Right? If this is the 1 hour chart and this is the sideways channel, some kind of, right? And this is the lower band, and this is the upper band, somewhere in here, you know. Where we would short the market? Well, we would short the market with the counter trend line and look in here, bearish candlestick formation. Bearish candlestick formation near the up horizontal line. Where would we buy the market? Well, with the bearish candlestick formation near the horizontal line. You know, what is happening right now? Well, most likely the market is going to touch the upper band somewhere in here, is going to form a bearish candlestick formation, right? And then we are going to go short. It's always the same, everybody. The market is going to react when it finds the appropriate level. Miguel says sideways. Candlestick formation are more important for decisions in a sideways. Miguel, no, it's all together. It's not that the candlestick formations are more important than the counter trendline break, but we are trying to make sense out of the indicators, you know. We are trying to make sense of 1 plus 1 plus 1. Okay? So if this is the case, I would enter short in the market. Of course, I wouldn't know what is going to happen, but because we don't have the crystal ball, but if this was the case, this short would make sense to me, because I would enter number 1 because of the counter trendline break, and number 2 I would enter because of the bearish candlestick formations. We are trying to make sense out of the indicators, everybody. It's not that difficult. Okay? You need to make sense out of the trend, the structure, the candlestick formations, counter trendline breaks. Okay? So if this is NZD cat, don't buy this market right now, everybody. Don't buy. Oh, Passion, but you said. I know what I said. I said buy bullish candlestick formations in an uptrend, right? This is not an uptrend, everybody. This is a sideways channel. Don't mix bananas with apples. It's all fruit, of course, but don't mix. You need to be clear what is a banana, what is a strawberry, what is an apple. Okay? So we are going to short the market when the market shows us the bearish candlestick formation together with the counter trend break. Would you look to USD CAD too? Yes, ma'am. USD CAD. What time frame, Maxine? What time frame? Daily chart. Maxine and everybody else, stay out on this pair on Friday. If you are in a trade, close your positions on Thursday night, because we have the non-farm payroll at the same time with the news release from Canada, right? So if you are in the trade, if you are long on USD CAD, put your stop loss in here, secure your profits. Okay, this should be your stop loss. Secure your profits, but don't trade, don't enter. Neither short or long USD CAD, it's out. Especially if you are a beginner trader. 4-hour chart. 4-hour chart, the same, right? The market is moving up, but because we have non-farm payrolls coming and the news from Canada, this market or is going to continue to go up, or is going to reverse, or is going to whiplash. Is going to whiplash up and down and stay somewhere in here. Okay? Maxine, what can I tell you? Right now we are in an uptrend and the market is moving up. Everybody, if you want to trade, if you want to buy USD CAD, wait for a retracement and go long after a counter trendline break. But this must happen before Friday. If you don't see any retracement before Friday, stay out of USD CAD. Okay, everybody, our time is up. See you back tomorrow. Do your homework. If you want, you can send to my email. Try to identify bullish candlestick formations in an uptrend and bearish candlestick formations in a downtrend. Until tomorrow, stay strong and trade with passion. This is FXPassion signing off.